Hey, good morning, good afternoon, everyone. As you are joining today's Crimes and Cocktails, I want you to be thinking about for your customers, if you're a retailer or if you are someone who is selling directly with customers or that's one of your primary KPIs, what has been one of the most important factors in driving growth for your customer base? And we are going to have a poll here that's going to be coming up shortly, but I just want people to be thinking about that. Kind of what are the one or two things that come to mind? We have some data that we'll be sharing, but if you're having coffee, welcome. This later in your day, welcome. And we are almost at critical mass to get started. All right. Welcome to today's Crimes and Cocktails. Unfortunately, this is the last Crimes and Cocktails of the year, but fortunately, that means that the go times are upon us. And so holiday sales have already started for our clients. We've seen some flash sales, some really crazy deals, people pulling forward from Black Friday, Cyber Monday. We'll, of course, talk a little bit about what we see, especially in the American consumer, but also in the European consumer today. And then we have John Borman joining us from Cap One. And we're going to talk a little bit about the benefits of pre-authorization, fraud screening, how to build relationships with issuing banks, how to understand the card networks, and all of that type of information to be able to maximize sales. And what are some of the stories, the crimes, so to speak, that setup can help you really stop most effectively when you change to the more modern way of thinking about where and how to deploy technology to stop financial crime. So I'm really excited for folks to be able to join us today. There is a Q&A function. I already see some questions coming in, which is great. Please do, if you have a question, go ahead and plop it in there. When appropriate, I'll be prompting an answer for those questions for the group. Please do that. We welcome it. Don't want this to just be kind of an us talking to you. So speaking of, I'm Bennett. I'm Chief Customer Officer at Signified. I've been at Signified for about 7.5 years. Before that, I was an attorney and outside counsel and worked with Google and Tesla and a bunch of other large public companies. And Signified was one of my clients. I have loved learning about machine learning and artificial intelligence and about how fraud and payments and customer experience can all work together. How do you do all of that in the blink of an eye with technology is super intriguing to me. It's a large part of what we'll be talking about today. So to that end, we have John Borman. Hey, John.
Hey guys, nice to meet you all. I'm John, if that wasn't obvious, but similarly, been at Capital One a little over 10 years now, but about 7 years in the payment space. I lead our payment strategy for about half our credit cards. As part of that, also lead what we call our fraud partnerships group, which builds all the cool solutions that help us work directly with merchants and fraud risk providers. So my team works very closely with Signified and excited to talk to you guys today.
Thank you so much, John. Really appreciate your insights. There will be a recording and chat is disabled, which are a couple of the ground setting rules from this. So yes, we will post this. You don't have to take notes. You can screenshot if you want to, but no need. And we'll also send along a gift. So don't worry, goodies to come. Let's put up the first poll from today's session. I'm really interested in this to see if the collective experience of folks on today match some of the data that we have gathered in our own surveys and paired with some other folks' surveys. So what is that single most important factor that your end customers are looking for going into the holidays? Do you think that they're looking for value? Are they looking for really cool, novel experiences? Are they health conscious? Are they sustainability, eco-friendly conscious? Or is there something else that you think is driving your customers? I'm very interested in this. So we'll keep this poll open for a little bit. And I'll give you maybe another 15, 20, probably 10 seconds. So please get your poll in because we're going to be doing the going to be kind of leading the witness here very shortly. All right. So the rise of the value-seeking shopper. So you can tell what our opinion is of kind of what do we expect to see this holiday season. What does that mean if value is the primary driver? And then if value is the driver, how do you make sure that you capture every single one of those customers that are coming, to your site and ensuring that you're able to get that sale from that perspective? Getting new clients is very expensive. And so just want to talk a little bit about consumer behavior shaping the holiday. So can we share our poll results and overlay it with these? Perfect. So, man, I'm glad we didn't lead the witness here. I'm very curious what the other is. 4% of folks said that something else was doing that. If you feel comfortable, put it in the Q&A. And then if it's something that's interesting, maybe we can share it out. But 75% of folks thought, value seeking is what their end users were looking for. That definitely aligns with the data that we've seen. You can see the fluctuations back and forth between 2020 to 2024, kind of almost 50% increase there in terms of folks saying that that's the primary thing. Health conscious has kind of waned a little bit as the pandemic has gone off. And then experiences peaked in 2022 as people were like, oh my gosh, get out of the house. Like I need to go do stuff. And so you see a little bit of that 43 really leading the way and definitely aligning with kind of folks from that. I see some other folks who are saying what their others were that is really interesting. And we have some data later on that ties to what some other folks have said, which is about specific product offerings. Totally get it. Trading down. Can you have a smaller AOV? We're going to talk about that, assuming that's what you're talking about. And shipping costs and shipping times also matters. And we definitely have that in some later data as well. Cool. So in general, I think we're aligned here. And so if value is what consumers are really looking for, especially in the US and Europe, what is causing this? There's kind of a positive and a negative side of this. So the stock market seems to be doing well. Monetary easing on policy has finally started to begin. But really what we're seeing is pandemic consumer savings are gone. Non-discretionary prices are still high in the consumer's eyes. It's under the curve. Inflation has come down, but you're now at a new peak that people still aren't really used to. And actually what we're seeing is that unemployment and employment figures have started to soften. So these have, mostly counteracted some of the positives, or the positives have come too little too late, right? What we look, this is a pretty stark picture, right? So we're now, entering a 0.2 trillion kind of deficit in terms of accumulated excess savings to drawn excess savings. And so now people have less savings collectively and personal savings than they did entering in 2020, right ahead of the pandemic. And so you can see that we're kind of like back down beyond that level. That's why people are looking for value on top of layered with the inflation and the CPI. And so what we see here is always comparing prices and wages. What am I bringing home versus what am I having to pay for in my goods? And there's a 3% delta there in the wrong way for what people are feeling. I just want to point out that 3% delta is mysteriously going to come up again and again in our data of what is the change that we're expecting in terms of AOV, in terms of cart sizes, in terms of all that kind of stuff. I'm not a conspiracy theorist enough yet to know, but when you get data sets as big as we're playing with, whenever I see the same number show up again and again, I start to think, I wonder if there's a link here. So next thing that I'd say, this one's fascinating. And John, I know you and I talked about this, and I wonder if you've had a chance to think about it even more. Obviously, we're in e-commerce, credit cards, wallets, alternative payment methods. But credit cards and digital wallets still, of course, make up the vast majority of payment methods in card not present transactions and online transactions, e-commerce transactions. And something is happening when the stock market goes up, and male investors, especially those who have stocks and identify as male, dramatically increase their credit card usage. You and I had a conversation about this. Any further thoughts on what you see here?
Yeah, this was just one of the more interesting charts I've seen in a really long time. It had never, before looking at this, it had never occurred to me that like there would be a strong correlation between like the stock market returns and how much people are spending on credit cards. I think like reflecting on my own behavior a little bit, I think, I'm a big Robinhood user, and application of the stock market has really probably fueled some of this behavior. Like when I log in, I think Bennett, you were mentioning earlier, like when you see that green, it really just puts you in a good mood.
Absolutely, it does.
To
Yeah.
see that backed by data, I just think is absolutely fascinating here.
So what I would say then is this is one of our first key takeaways. Hey, male, if you can target male investors this holiday season, now might be a great time, right? And so I think that's a super interesting just factoid that you when you slice and dice the data a lot of different ways. If you happen to have a product that is particularly successful with male investors, really maybe pump that, right, from that perspective, and people will be willing to stretch and spend heading into the holidays. I have an interesting question from chat about retailers using Signified for digital wallets such as Apple Pay, Google Pay, PayPal, etc. And yes, we absolutely do that. And generally speaking, what we suggest is if you're going to have a screen on fraud, it should be across all payment methods, because once you shut down one payment method, another one might open up to risk from that perspective. Okay. Unemployment is edging up. Underemployment is edging up. I think there's been a lot of studies on this, but you can see that it kind of settled into a space. The jobs reports were pretty strong, and then they became less and less strong as we went through that. You combine all of these factors together with the Fed rate was going to drive consumer sentiment, but I've overlaid this with what actually has mortgage rates done. And so what we see is there's been a decrease in interest rates from the Fed and other federal policy making bodies in Western economies. But in the US, what we've seen since the election is actually a kind of rebounding in the available 30-year fixed year mortgage rates. And so I think that this comparison is kind of shocking to some consumers, right? Of, hey, we expected lower interest rates, we expected to be able, to go and maybe change what our housing situation was. And that's just not the case. And so now we're looking at, hey, we may not see, mortgage rates in the US get below 5% in the near term future. That is not what people were expecting. And John, I know you and I also talked about this as just a practical reality. I don't know if you want to share anything about your experience here.
Yeah, well, my experience is it's couched in luck, I think. I stumbled into a condo that I purchased in 2021, so I'm sort of in the luckily the fun part of this curve. But for me personally, I couldn't afford my condo today at the current rates, and so I think like you're seeing that start to trickle down into a whole bunch of different purchasing decisions across the economy, which is then going to show up for all of your P&Ls and all the activity that you guys see over the holidays.
I 100% agree. And so what we see is housing, like new housing slowed down, right? Housing availability slowed down. Certain types of housing, especially first-time homes, have slowed down. And so then it becomes, okay, well, what do I sell to people who are renting but maybe are thinking about staying in their apartment? What do I think about selling to those first-time homeowners who are looking to remodel or fix, change where they are from that? And all of that is very important to understand in terms of buying and purchasing patterns. I see someone who very correctly is saying, hey, if we're talking about correlating investors and people with houses, obviously you need to be focusing on higher quartile income folks. Yes, right. I would say in general, folks who own stock are probably going to be higher earners, probably, not necessarily, but probably. And then also people who have a house or a mortgage or not, right, are also going to be. So that is absolutely true. And I think it's really important to understand, why are people in your consumer base spending with you now? And why do they want to spend with you now? Where else could they have been spending that money? And why are you getting that share of wallet? I find that exercise really helpful when I talk with my retail clients, so that they can think about where and how to target. If you can target homeowners, males who are own stocks, if you have that ability, I think that might be something that's interesting to do. Okay. So what do we see in terms of these value-seeking shoppers? um, I'm very curious, given all the puts and takes that we just talked about, and kind of what your all's experience has been, leading up. How do you expect this holiday season? And I know we kind of already started, right, with sales as of Monday, November 1st, sometimes for folks. So I'm very curious, where do you people who are attending this, right in the thick of it, as you're looking at what to expect for Black Friday, Cyber Monday, and up through the Christmas time, what are you expecting for your 24 versus 23 holiday sales? Give people maybe 15 seconds to answer this question. All right, let's go ahead and move on. So this is kind of a look back of what we've seen. Obviously, 2020 was, a massive bump, and then we kind of had a little bit of a hangover trying to hit those comps in 21 and 22. And then 23 kind of got back to, kind of 10-ish%. We now project, as does Adobe and a bunch of other folks that do these types of projections on a consortium basis, that holiday growth will be about 8%, pretty modest, frankly, given all the puts and takes. And so if you can show the poll results, love to see people agree. Yeah, and so actually, I think the group here is probably a little bit more pessimistic than we are, and so kind of more hovering in the flat to +5. So maybe over under of 6 probably feels like where people might be settling in terms of if we were drawing lines. I don't know if that's wrong. I do see some very successful sales volumes already coming for us in our merchant network, but I'm very curious also if anyone is willing to kind of ask a question or comment about, hey, why are you expecting greater than 10% year-over-year growth for you? I'd love to hear what you're doing that is being so successful. And as we talk through some of this value shopping stuff, I might weave some of that in, and also talk about what I'm seeing work for our clients. Okay, so given that value shopping, if you're one of the tons of folks that maybe can't target, someone who is in top quartile of income and is looking to substitute kind of the home buying experience or something else with goods or services or a trip. What are people doing? And what we're seeing more and more is, or rather at high rates and continuing to be at high rates, is people are doing the opposite of shrinkflation. They are self-selecting into smaller items to be able to save on that. So rather than buying maybe a gallon of milk, they buy half a gallon. Maybe they're buying organic, they buy private label, or maybe they buy private label organic. And so you see that changed brand, right? And so I do think that there's a lot of brand loyalty that is being questioned right now. And if there is a substitute where value is being able to be substituted, people are going for it. And so that is something to be aware of, and how you position how your products are. How do you say, hey, here's a premium one, but here's a value-based option of my premium one, when really all along you just want to sell that premium item. A lot of it's contextual awareness. And that's one of the first things that I want to say has been working for some of our clients that are seeing a lot better sales, is they are doing some amount of price discrimination by positioning premium and value right next to each other and letting people see that value as a comparison and say, I'm opting into that value one. I feel like I got a great deal. I don't need whatever that premium experience is. And then people who can afford the premium experience and aren't as price conscious are like, great, I got the premium experience. I didn't have to go with the value option. And then both of those customers end up being happy. And I think that's really interesting that we're seeing some clients be able to do successfully. The delayed purchase is a big part of why we project 8% and not 5%, like some of the folks. We see a lot of pent-up demand that consumers had from delaying spending, delaying gratification, from waiting for good deals, from frankly waiting for the results of the election. People were telling us left and right, like that's what they were doing. And so that's partly why we're projecting higher than I think some people have been experiencing and feeling for this holiday season. All right. So what we ultimately get here is this, like, we do think that people will be buying less expensive things and trying to get more things in their cart. And so ultimately we're seeing like maybe the average order value actually ticks up a little bit. And in terms of the total cart, but the individual items inside of it are a little smaller. And John, I know you and I talked about this, and like you don't see as much the stuff on the left. You see the stuff on the right, right? The ultimate impact of the purchases. Any trends there you want to share?
Yeah, and I did my homework actually. I checked our earnings release a couple weeks ago. So as a card issuer, right, we don't get as good of visibility into the card itself, right? We can't see what the customers are actually purchasing, but we can see how much they're spending on our cards in general. So for our Q3 results, we saw a 5% increase in purchase volume. So we're still seeing healthy spend. So I think there's an interesting dynamic here where like spend continues to go up, but actually the things that people are buying are changing. I haven't really put much thought against like how long will that continue to be the case, and what does that actually mean for your go forward strategy? But it's a really interesting shift in dynamic.
Got it. Super helpful. And I see one of the folks that is saying, hey, they're projecting greater than 10% is they're just really laying on the marketing spend. They feel like they've dialed in their ideal customer profile and are, a growing brand, right? So makes tons of sense. And we see that in our portfolio for sure, as people are like, hey, we're riding a wave that is counter to the rest of the market. So let's continue riding it. So congrats, whoever that is, anonymous attendee. All right. So this is the callback to the earlier kind of comment about, hey, what do customers who really value loyalty tell you they really want? I think someone mentioned, let me just scroll up to make sure, shipping costs and shipping times, right? So free shipping is the number one way that we've seen that you can focus on direct value to attract consumers to loyalty programs and to try to build that kind of loyalty. Amazon Prime does this, Walmart Plus does this. All of like these massive organizations have keyed in on this being a key concept of free and fast shipping and free and fast returns. Those are the key kind of concepts. If you look at the lower prices on selected products, you look at early access, you look at folks like Stanley or any of these influencer-driven brands that is, really popping right now. They have a VIP club where there's an extra hour or 2 hours availability. Obviously, John, like earning loyalty points for future purchases is a big part of credit card usage and card brand loyalty programs. Love to hear anything that you have to say about that.
Yeah, and it's obviously like a little bit different as a card issuer than a retailer, but we continue to see extremely high demand for loyalty points, rewards based credit cards. Capital One launched the Venture X card a couple of years ago, and that card's doing great. We also launched a new Kohl's Rewards card about a year ago, and we just continue to see great demand and usage of rewards as a way to build customer loyalty. And so I think for us as a card issuer, like that's sort of a big piece of our strategy going forward.
Totally, and every single retailer that I speak with is looking at ways to combine the concepts of loyalty and payments, right? From that, so it makes a ton of sense. Um, I see a question of, hey, do you expect this to increase loyalty fraud, and what do you recommend to mitigate that? Yes, I absolutely do expect, and in fact know that it increases loyalty abuse as soon as you create the concept of value, and then you have to protect it. So that's probably, risk 101 to anybody who's attending this webinar. That's not the focus of today, but we do have a Crimes and Cocktail on loyalty abuse and protecting accounts. We can follow up that for whoever's asking this question or wants to have this. But yes, absolutely. Skipping down a little bit, I do just want to make it really interesting point. Hey, 31% or 20% of folks are perfectly happy with value of just giving them information that they find valuable. Like some of these are really expensive. Free shipping, holy crap. Like you have to bake that into your price or that's going to hit your P&L. Like this is very expensive. Yes, of course, people love it, but it's very expensive. How hard is it? How expensive is it to timely notify somebody in your own app or via email or via opt-in text message of something that they actually care about, actually going on sale or being available for the first time? You deliver a customer some amount of value just by giving them incredibly timely notice. Lots of people are really happy with that. And the cost is incredibly low. So I think that the key is how do you not spam people, but how do you give them the correct information? And so personalization, Gen AI, of course, that's another whole Crimes and Cocktails as well. But I do just want to point out, just because these are lower on the list in terms of percentages doesn't mean these are invalid strategies. These can be incredibly cost-effective strategies. Okay. All right. What about fraud and abuse trends related to what we are seeing? So, frankly, chargeback volumes is up. That is an increase in both financial fraud and in consumer abuse. Consumer abuse is slightly outpacing actual financial crime. I think this has kind of generally been the case. We've seen a kind of slow steadying, boil the frog in hot water. What I wanted to call out, and John, I know you and I talked about this as maybe being an artifact of some issuing banks maybe changing their policies. We are seeing the highest increase in pressure is in low AOV amounts and in smaller carts. And so that could be like a low AOV testing. And so what might have used to have been an attack that targeted 500 AOV buckets now is targeting 50. And so any comments on what you think might be driving that from other than fraud ring behavior?
Yeah, there's another interesting dynamic here, which is around how issuers process chargebacks. If you think about like as a retailer or even for Signified, right, the only way that you guys become aware that fraud happened is when that chargeback notification comes through. But the inverse of that is that if fraud happens and there isn't a chargeback, you're never aware that fraud occurred in the first place. One of the things that many issuers have is what we call sort of like a write-off threshold, effectively like, if a customer calls to report fraud, a lot of banks have human beings that go into that and basically make a determination. Does it cost more money for me to spend time on this than it does to actually like recover the fraud volume there? And they might not even process chargebacks on low dollar things. Capital One is slightly different. We sort of have our whole system automated. And so anything that's sort of eligible just flows through the system. And so we're sort of not making that kind of a determination. But one of the things that we've seen at some of our peer banks is they're starting to adopt similar automation capabilities where you might not have to make that determination of, is this, small potatoes, it's not worth my time processing it. They've sort of abstracted away that the need to even make that determination. And so some of this might actually just be fraud that's always existed, but you're just finding out about it now.
Right. which I think is great as the banks become better at being more efficient. Or you all had these processes in place. You built the technology a while ago. As other banks adopt that technology, this like underlying silt that the merchants have never seen before just might actually like pass through the system now because it's more efficient, which makes it even more important to have pre-auth screening. And because these low AOV often manifest in carding attacks or might otherwise not trip whatever a manual review threshold might be, it's not efficient for the banks to manually review the chargeback. It's not efficient for the retailer to manually review the transaction, right? From that perspective. All right. So putting a little bit of this together, I just wanted to talk a little bit about authorization rates and fraud approval rates and the whole of that. So this is a massive industry-wide kind of inefficiency problem. That's how I describe it. And so, John, I'd love for you to talk a little bit about how you think about the problem statement, and then I can kind of layer in how we think about it as well.
Yeah, so maybe just to lift the hood a little bit on like how an issuer thinks about the world. So first and foremost, like as an issuing bank, stopping card not present fraud is just really, really freaking hard. And the reason that it's hard is not because, the data science itself is hard. It's hard because there's a lack of data in the ecosystem. So at Capital One, like we think we're at the cutting edge of data science with the data that we have available to us. But if you think about a normal card not present transaction, like normal e-commerce transaction, there's very, very little data that ultimately makes it to the issuer. So as a bank, we might know, the purchase amount, we might know, obviously we'll know the merchant name, the merchant category. We might get like an ABS or CVV as part of the transaction, but like that's pretty much it. That's all we know about the transaction. And so we're effectively trying to make a determination based off of, the dollar amount, the time of day, and then what we know about that customer and their spending habits, and maybe like, the risk level of that particular merchant, and sort of like combining what we know about our customer as a bank. But that's pretty inefficient in terms of determining fraud or not fraud. And so ultimately, like there's a big ecosystem data problem. And I think what we're going to get into some of the data sharing pre-auth patterns that we have, but simple communication from the merchant through a bunch of their PSPs into the banks themselves can unlock transformational results here.
Yeah, and later on we have a couple example scenarios of like what we call thin file decisioning, and we'll ask this group to be like, hey, which of these is fraudulent, 1, 2, or 3? And man, it's hard when you have a thin file, right? And so all that totally resonates with me. And so what we also see is the results of that difficulty in knowing the customer, right, in a card not present transaction is a really big problem for retailers and banks, right? It's a shared pain, right? Because a lost sale is a lost sale for both of those parties. And it's a hundreds of billions problem in the US alone. It's even bigger in Latin America and other regions. And it really pisses off consumers, right? You deny a card, it's kind of like, well, what? It's them. It's never the consumer. It's always them, right? And in this case, sometimes it actually, is kind of a collective failure to get the right answer.
Yeah, and
So
Bennett, just to like double down on that, I think like historically there's been a misconception, I think, that like, a false decline doesn't matter to the bank. We care about false declines just as much as retailers do. It is super easy. As a consumer myself, it's very easy for me to whip out, my Capital One card. It's easy for me to whip out my Chase card or my Amex card, right? And so the cost of a false decline for us is also quite high. And so we are equally motivated to get rid of false declines in the ecosystem.
yeah, and I think that's really well put. And we actually have a couple examples that will underscore why both the retailer and the issuing bank really care about getting this answer right. And okay, so what do we do about it? So there's lots of different ways. 3DS is one of the ways, right? We can talk about that as an option. That's really low adoption rates in the US. Airlines sometimes use it. Sometimes other types of experiences will use 3D Secure in the US. But in general, adoption rates are really low. The implementation of it with banks is quite poor. The data architecture is pretty antiquated. And so what we've done is we've moved a lot of our clients from what is called post authorization, or after the bank kind of makes its screening decisions, to before. And what that allows us to do is two things. It allows us to send clean stuff to the issuing banks, so it's less risky overall. And then it also lets us simultaneously send our information and enough of that supplement that thin file with more healthy information, as well as our determination, to the issuer ahead of the time that the payment gateway provides that information. So this is a really cool way to kind of solve the problem of shortcutting all of the antiquated tech stack stuff. And so wanted to talk a little bit, like, obviously, John, you all have built this. I think, Cap One is definitely at the forefront of this, issuer ingestion and being able to use this information. I do think the industry is going there. Any comments on kind of this route in the US?
Just kind of echoing what you said, like we are hell bent on making this the industry standard going forward. This is an area where, as a bank, we're not interested in competing with our other banks. We're actually, very public with everything we've built in this space. We want everyone to have the solution. And the reason for that is we have such high conviction that this works and delivers incredible value, and not just value back to us as the issuing bank, but value to everybody in the ecosystem, right? Like we all win when there's more approvals, and we all win when there's less fraud. And if we can do both of those things together with pretty simple solutions, facilitated by Signified, you get pretty awesome results. And so we are, I mean, for a few years, we've been convinced this is the future. I think we've now got over $1 billion of payments that we've rescued through this program. And so we're now all in on it.
Yeah, I love it. A billion in rescued is a fascinating number, right? And supposedly there's 330 or more to go, right, in the entire ecosystem. So we're just getting started. But still, a billion's a big number, right? Look, we've experienced this. We typically see a greater than 1% improvement in authorization rates when we do this, which is really massive when you think about your scale of payments volume. And not only that, we see a fraud go down or stay flat, and then a reduction in false positives by dollar, right, from that perspective. And so this just is a much better customer experience. The payment goes through the first time, and cutting insult rate or false positive rate or bad declines, whatever phrase you internally use for this, by half or more is really, really, really powerful. All right. So let's talk about a little bit more of the crimes side of things. And so this is an example of just to try to orient you a little bit here. So this was an HPV card testing attack that we saw with a client. And so you can see from September 30th to September 20th to September 30th, you see a really big ramp up in volume and attempts that are about the card testing attack, right? From that, it's $299. It's a counter pickup order, right? So it's like got this this low latency requirement. They're gonna come pick it up right then. You got to make the decision right now. It's all from a compromised bin, and the prior state could not figure out this traffic in time in order to be able to stop this from going to the issuing banks. So what happened was all the issuing banks and the payment processors saw this massive spike in bad volume. And then once we went live and with pre-auth, we were able to completely shut this behavior down. And so, John, I don't know if you want to talk about, but like when you see thousands of attempts that are just trash coming into your ecosystem, like what do you all do?
Yeah. So we talked a little bit about the value of pre-auth being the ability to unlock data sharing. The other core benefit that I think, as an issuing bank, we don't get to talk about a lot is, I mentioned earlier how there's very, very little data that we get about a transaction to be able to decision that. Well, one of the most important things that we use to make a decision to approve or decline a transaction is simply how much fraud have we seen at that merchant before, and basically the historical fraud rate. And so you can imagine, right, if you don't have any, if you're post off and you don't have any defenses in place, right, all of these junk transactions flow through to us. And then we see it as the issuing bank, and we start to think, holy crap, this merchant's really risky. And then we'll start declining a lot more transactions because we don't know that a merchant may or may not have fixed that problem. If you move to pre-auth, that junk never gets to us in the first place, right? We never see the fraud. We never then, start to increase declines or anything like that. The unfortunate reality is like all of this is automated. All of this is happening purely based off of the models that we have in place. And so there's not an easy way to pick up the phone and be like, hey, John, we made a change. Like we try to handle the scenarios as we can. But the best thing you can do as a merchant is just get rid of the junk up front, so that it never makes it into the issuing ecosystem. And then no one will ever know that fraud was attempted on your website. So it's a really healthy way to improve auth rates without really doing too much.
This is a massive thing that I always talk about with clients whenever we talk about this. They're like, hey, why can't the banks do this or blah, 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 blah. And I'm like, let's talk about this, right? Like, how much volume do they see? Like, how realistically could you run an ecosystem that is the scale that they are, that is not fully automated, where the latency requirements are like this for authorizing a payment? How would you possibly do that? You have to do it with data sets. You have to do it with models. You have to do it with rules. And so I think that's really important to underscore, of just like a merchant is part of an ecosystem. And when you feed like junk into that ecosystem, it costs everybody money, time, effort to try to clean it up.
Yeah, and I'll have to double check this, but I think it's literally the most important feature to our models, simply the fraud rate that we've seen at a particular merchant. And so when I say it's important, it's like actually the most important thing that goes into our decision making.
Super helpful. So it's a two-way street though, right? And so since we've been doing this now for a few years, actually almost 5 years now with pre-auth deployments, we've gotten really good at interpreting when the bank knows stuff that we don't, right? And so if you think about, hey, the consumer calls and says, hey, my card got stolen, I need to do this, but there's like a day, et cetera, before that gets processed. And the bank is saying, hey, we actually reject all of these transactions. I know you signified said yes, but we really think these are bad. We have this data element that is saying no, we can't authorize this. We were able to link some heavy bank declines that happened on July 16th with an attack that was culminating again with a different vector, but using similar profiles on the 28th. And so we learned from the bank, and then we're able to block it so the bank didn't see that again, right? And so again, it's us versus the bad guys. And I just want to try to emphasize that for everybody on this call, that the benefits of pre-auth are, hey, the banks don't have to see the bad stuff. And then when the banks do actually know stuff, which they often do, that the retailer doesn't or another fraud system doesn't, then how do we feed that back into the model so that we're learning from each other? And I think that's a point that sometimes people miss. So let's give a couple of examples of what does this look like? And so this one is fascinating to me. And I don't know how else to make the case more strongly. I was so pleased when my teams were able to pull this example. This is the exact same footwear brand. On the left is a direct-to-consumer website. On the right is a marketplace selling the exact same shoe. You notice, and this is recent too, this is October 10th. The consumer is trying to buy something at 7:51 a.m. They got declined by the issuing bank at the direct-to-consumer website. 14 minutes later, they try again. They search, okay, who else has the shoe? They find who else has the shoe. Exact same card. You can see here, it's the Celtic Bank is the issuing bank. We were able to pass information on the marketplace side through the issuing bank rails. And so even though it's an attempt for the exact same dollar, well, it's off by what, 4 cents? Okay, so it's 4 cents less, but it's the exact same shoe from the same consumer. The bank was able to say yes because we gave them more context, because we were in the pre-auth rails. And so I don't know how else to give you a better example that this is what is happening. And this is why it's so important if we're all an ecosystem, you got to be part of the cleaner part of the ecosystem because somebody lost this sale and somebody gained this sale, right? And I think that's the big bogeyman right here. Similarly, this is the example of why the banks are on the same side. So if you see here on the left, we have again another order that was created at 4:43 a.m. And then they tried again with a different credit card. So they went from this credit card to a Capital One credit card. And so again, like the retailer made this sale, but the customer had to change their cards. And so in the industry, it's called what's your top of wallet, right? And so, hey, I went from this one, I tried my next card, that one went through. And you can see here the request exclusion, one leg out. This is a European transaction. This happens across the board, but you see a fraud decline. Sorry, this is a European retailer that is operating in America. And so you see a fraud decline, and then you see, hey, it went through over here, right? And this did not result in a chargeback. And so the exact same transaction, right, from that perspective. So hopefully these two examples, and John did his homework and said, hey, we've already been able to see over 1 billion of this on our own, kind of records. We see this all over the place. Hopefully that's helpful as illustrations of how does this actually work in a particular consumer transaction. Okay, we are almost there. And so this is a little bit of a fun exercise. Hopefully this is interesting for folks. We have two examples of would you approve or decline these thin file transactions. And so I'll give you a hint. They're a little bit of gotchas. So I apologize in advance, and hopefully we take it in the spirit of this is really freaking hard to do. All right, can we get the first one? Are we doing folks as a poll? I believe. Well, we are. Perfect. Thank you so much. All right. So, which of these is? I'll give you a hint. Only one of them is fraudulent. But this goes along with the concept of thin file and how hard it is to be able to make a fraud yes or no decision on this. So you have AVS, you have CVV, you have IP history. Obviously, IP is not totally related. It can be dynamic. It can be spoofed. How far is the person when they're making the purchase from their billing address? And what's the email purchase history? All right, let's give people maybe 5 more seconds. All right, let's see how people did. Oh, people hated option A. I agree. Option A is hard. People love CVV as a check. People don't like that the IP location billing address address is here. This one's a big one, right? Like if someone's far away or shipping to somewhere that they haven't seen before, retailers hate it, banks hate it from that perspective. Actually, the answer here is C. And and I think this is an account takeover, right? Example, banks are not going to know an account takeover at a retailer, right? It's like prime example of how this is really, really, really hard when you have thin file information, and why being pre-auth is so important. A bank would probably authorize, order C all day, right? From that perspective, on the information that's given to them. All right, one more. This one might even be harder, honestly. So let's get this up. How many of these do we think are fraudulent? Give people maybe 5 more seconds. All right. Do people hate all these? Are we declining all these? What do we got? Yeah. So I'm sorry for the gotcha. So definitely the minority of folks got these right. Only one of these is is fraudulent, and it's B in this example. And so the interesting part about order A is, people really dislike it's kind of an old fraud fighting kind of thing. What's your triangle, right? The IP, billing, shipping, right? Like how big is that triangle? How big is the area in that? People are trained to hate that, right? From that perspective. And I think what's also interesting here, anyone who thought that order C is something that should get declined, this is a new customer, right? And how damaging is it to decline a first-time customer, right, at your site? So just want to kind of reemphasize how hard this is when you really get a thin file. And hopefully what we can do is kind of illustrate, hey, we got to be all in this together. Like the better we can data share in this ecosystem, the better we can make this work. John, anything you want to call out on these examples or this exercise?
Well, I appreciate you highlighting how hard it is. I think like though we deliberately selected some difficult ones, I think the inverse of that is that like most of them are easy, and most of them are easy in the direction of this is actually really safe. And one of the big value unlocks of going pre-auth is that, for the first time, a bank can get a signal that says something to the degree of, hey, I looked at all of these things, IP, email, blah, blah, blah. You don't actually have to know the details, but you can trust me and it's really safe. And there's ways to share that information. And simply that sort of signal is incredibly powerful as a bank because we just don't get that from anywhere else. And it's notably different from what we would get from anywhere else. And so part of this is to like buy ourselves a little bit of cover that like, hey, this is really hard, but like the inverse of that is like there's a whole bunch of easy too, and that's where the value is.
Very well said. Very well said. Don't throw out the baby with the bathwater. Focus on solving the problem, right? I think it's always good advice. There's a couple interesting questions that have kind of come in before we get to the wrap up. What about blocking transactions that have been identified as freight forwarders or resellers or et cetera, and kind of enforcing things? I'm just going to step back a little bit and kind of show this is another benefit of being pre-auth. So if you have a policy engine or a decision, our product that does this is called Decision Center. If you have a Decision Center engine that is ahead of the payments ecosystem, that has a bunch of benefits. Number one, you don't have to send that transaction for payment authorization because you don't want to ship it anyway. Number two, you can stop the behavior before they apply promotions, before they take up inventory, et cetera. There's a whole lot of customer experience reasons you want to have your policy engine before it goes to the bank as well. It helps with your CRM and your order management system and your fulfillment systems and all that kind of stuff. So we focus today on the fraudulent use cases and the ways that criminal rings take advantage of that. But also this can be very helpful for anything that you want to do for business policy purposes as well. All right. So we are almost out of time. So I just want to say, if you are interested in live data, we have a live holiday data tracker. You can find that on our site. If you're interested in fraud and abuse, which probably almost everybody here is, we have a state of fraud and abuse from 2024. That's got a lot of really great information about a lot of the stuff that I wasn't able to highlight in questions from the group. So please do seek that out. You will be getting an invitation to, if you are into proof or zero proof, you can get a mocktail kit or an actual kit. Hopefully you're in a state where that's allowed. If it's not, I apologize in advance. Really hope, these are some great seasonal offerings, and I hope that you can have a toast to a successful holiday season that is, I think we said the over-under was on 6%. So I hope everybody here is over 6%. I personally would bet on it and really appreciate everybody's time. John, thank you so much for joining us.
Thank you for having me.
Okay. All right. Thanks so much, everybody. Have a good rest of your day.